Hi everyone. So I've been looking at the crypto market and what a lot of people are saying about it, and they believe that we're having a head and shoulders topping and we're going to go down to 40,000, and it's bearish, and there's all this bad news out there, and I'm just here to crush that. I think we've had enough pullbacks. I'm not saying that we're going to go to 1 million by the end of the year. I think actually we have shifted gears. Bitcoin has shifted gears, and they're going to rise at a slower pace moving forward. I think that's already started. But with that said, we're not going down to 40,000. I'm sorry, but anybody holding their breath for that, you're probably going to die waiting. And I mean, this is just a figure of speech, not literally telling anybody to hold their breath or anything along those lines. It's stupid. I have to be so careful about things I say, but it's just you get the point. So with that being said, and I said the same thing when people were calling for $20,000 Bitcoin earlier this year after we had hit 40,000. I said, you're probably going to, don't hold your breath. So the main difference, and I'm going to compare the last bull market to this one, and this one has obviously had a stronger start to it, and the pace is just incredible. And people were saying, oh, we're due for a correction. Well, I hate when people just say we're due. Why? Why is a correction going to happen? Because you have to tell me some things, and then they just point to a chart and say, okay, well, I'll give you a reason why that chart looks like that. And now we have to decide whether or not we're fairly valued. That will give you a better idea of if you want to buy or sell an asset. And stocks are based off of earnings and future returns because they produce dividends, which pay people back. Cryptocurrencies are based off of utilization and use and the demand for their use. And that is how you value them. With that being said, fundamentals are strong for Bitcoin and cryptos, and that's not changing. So compared to the last bull market, and why it makes sense the monthly candlesticks and the monthly chart looks the way it does, and that is not the reason why you should be concerned about a massive pullback, is because of the fact miners don't have to sell Bitcoin to fund new mining machines to keep up and stay ahead and try to continue to not fall behind in terms of accumulating Bitcoin and mining Bitcoin. As you see here from these articles, we did have them selling, and a lot of money has been made by Bitcoin miners from selling their Bitcoins that they've produced. However, they've also been issuing shares. And as you see here, because of the fact in the previous bull market, there were miners who were publicly traded companies, but it's just not to the same degree whatsoever. And we have more miners this time raising capital through stock issuance, and that is reducing the need for miners to sell their Bitcoin. And I just see that trend continuing. Why is that important? That gives them the ability, unlike most other commodities, gold, oil, food, lumber, where you can store those things, but the cost to store those commodities is a lot higher because you have to have warehouses, and I don't know the logistics of it, but it's a lot cheaper to store Bitcoin for selling it in the future at a higher price. You mine it today, doesn't mean you have to sell it today. You can issue stock, and then you could sell it at a higher price in the future, buy back the stock, and you keep the difference. So, that is the benefit of Bitcoin as compared to other kinds of mining or commodities producing companies. Bitcoin not being a commodity, but mining and so on and so forth, you should get the comparisons. With that being said, this gives them the ability to not sell, constrict supply, and when we're constricting supply of Bitcoin, obviously that's going to be positive for the price of Bitcoin. And when you look at, when you read these headlines, with the bottom one being the most appealing, Bitcoin miners net position turns positive. Is a rally to new highs overdue? Yes, it is. It is overdue. On-chain data shows Bitcoin miners are hodlers and accumulating. Yes, they are. They are starting to accumulate. And that's because they don't need to sell their Bitcoin to issue or to fund the acquisition of new miners. They can issue stock. If you're going to sell your Bitcoin and that's going to raise you, let's say, $100 million worth of capital, issue $100 million worth of stock. Hold on to the Bitcoin, wait for it to go to a higher price, and then you sell the Bitcoin, buy back the stock. There's no difference there, but then you get to keep the difference. Or you just continue to issue stock and you don't sell any of the Bitcoin if you continue to believe the price will go higher. And the perfect thing, the beautiful thing about that is you're not borrowing money. In the past, you would borrow money to buy miners, and then there's interest, and then there's leverage, and so on and so forth. When you issue stock, there's a ton of flexibility. And I don't think a lot of these companies have found a perfect way to manage it, because now there's more buttons and gears and levers for them to pull on the dashboard, but they're going to work into it where that's going to be incredibly positive for the price of Bitcoin. Now, you compare this bull market to the last bull market, and you compare the first month being record-breaking, the first quarter, of 2021 being record-breaking, and the pace at which Bitcoin's price is rising is accelerating. Well, it makes sense. It's not crazy. This is not, investment and us getting over, ourselves and getting ahead of ourselves. This is environment and circumstances making sense. So, we look at Riot blockchain. You look at their basic shares outstanding, 25 million. This is quarterly, and I don't know why the most recent quarter doesn't have any information, but you see they went from 25 million shares to 28 million to 34 million to 44 million, and it's just continuing to rise. So, we're seeing them tap different areas for financing. So, with that being said, they don't have to sell their Bitcoin. So there's going to be a lower, more limited supply of Bitcoin. Not just the halving. The halving is bullish for Bitcoin. But this is almost like another halving, in which case the miners don't have to sell. And they're not going to. It doesn't make sense to. And that is going to matriculate through the market, and we're just going to see that trend continue, which is why I believe a lot of people find it hard to believe and make sense of where we are today with the price of Bitcoin, but it makes absolute sense. When you look at the monthly chart, you end up thinking, man, this has just gone too fast, and we're due for a pullback. Okay, why? Is there going to be less demand? Is there going to be more supply? Or Bitcoin whale is going to come on and unload? I mean, I guess, yeah, that's possible, but, nobody's saying that as the reason why the price of Bitcoin is going to come down. What all the evidence is showing is actually the exact opposite is happening. And I think a lot of people did end up coming in who were Bitcoin whales and selling, because obviously they thought, okay, this has moved too fast and whatnot. But it would be an issue if the price moved so fast because of investment and people buying in and retail investors buying in. The price of Bitcoin hasn't moved this fast mainly for that reason. Part of it is because of the fact that miners don't have to sell. Part of it is because of the fact that they're constricting supply. And they didn't do it to the same extent in the first quarter as they are now. The second quarter, it's going to look like they're going to constrict supply even further. And the reason for that is because when you read actually the demand for these mining machines, it's actually, there's a backlog. And now Riot Blockchain, just recently a headline came out that they've made purchases of Bitcoin miners and they're going to continue to get a steady supply until 2022. So they're going to continue, or 2023, I'm sorry. So they've pretty much said, we'll continue to buy. They were right now in a backlog until October, but then they bought more, and now the backlog, or I guess, the they're pretty much reaching limits. I mean, obviously, if they could get them sooner, I assume that they would take them sooner. If they could be made sooner for them to get, but they bought all the way out until 2023. That's an insane backlog. And they were able to do that through the issuance of stock. So now they can just hold Bitcoin and be their own bank. So right now, the situation's different than the previous bull market. And if you're going to go be an analyst or a trader or any of these people and look at the previous bull market as insights as to what this bull market is going to do without thinking about the main differences, then you're going to fail. Retail investors made up the previous bull market. Institutional investors make up the current bull market. We had tiny money previously. Maybe a lot more people, tiny money. We have way more money. And that's what matters, okay? Previously, what took us to $1 trillion was retail investors. And people, find it hard to conceive the price could go even higher than that. I mean, $1 trillion, and if you have to go up, to this price level, that's 10 trillion, that's a lot. I mean, the stock market, the United States, the market cap of all the stocks on U.S. exchanges exceeds 100 trillion. So just by that number, if the investors who put money into stocks take 5% of that, and let's say instead of putting it into gold, put it into Bitcoin, that's $5 trillion going into it. And I mean a market cap for Bitcoin of $5 trillion. So there's plenty of room to run and go higher. And that's what, people have to try and have to really grasp and understand is it's different with institutional investors. The other thing that's different, and I'll show you on the chart, is they take time. They have so much money that they don't just buy it in one trade. You listen to an interview with the CEO of MicroStrategy, Michael Saylor, and he said, when they invested, they couldn't just buy it all at once. And there's a reason for that. I'll let people look it up. But he had to buy that over a couple of weeks, his Bitcoin, and work himself into that position. So when, we've seen previously a bunch of parabolic moves, I'm not saying that we can't continue to see somewhat of a parabolic move like that, but it's going to be different, and we're going to see kind of more of a stair step higher. We're no longer going to see these insane parabolic, rip your face off just to the moon moves in Bitcoin, which we haven't for a little while now, but we're not going to see those volatile moves. And we're still seeing them in altcoins today, smaller ones especially. Filecoin being a great example recently. You're not going to see anything close to that extent. I don't think anybody is saying that for Bitcoin, but you're just going to see something different. It's going to take more time. It's going to be more methodical. This is going to be more of a melting up. We're going to see very, very beautiful 45-degree angle moves higher in Bitcoin. And that's just because of the way these investors buy. Not just that, institutional investors, unlike retail investors, don't just say, all right, we're going to go in. The fear of missing out can exist to a certain extent in institutions and whatnot, but they also have committees and teams and departments, and they go and talk to a bunch of different people. They get a bunch of different views and a bunch of different angles and perspectives, and then they make an investment decision. And then they start to buy themselves into a position, and there's a process for that. So these things don't just happen overnight. And then, they're also going to put in, use options and all these other things and hedges and whatnot. So, and that's if, they do that. I mean, there would be funds and other things that just say, we'll get 5%, we'll work it into there, and we'll do this. But there are going to be cryptocurrency funds who work themselves into positions, and they're mainly focusing on crypto, and they're going to use options. I don't think a fund that's just going to say, we're going to put, 5% into Bitcoin is going to be concerned about hedging that. they're actually using it as a hedge. But it's more methodical is the point I'm getting at. So you're going to see more of a stair step higher. And we've already started to see that. So it's going to be different than the last go around. We do have the legs. We do have the money. There is all the stuff that you need for Bitcoin to go higher and a lot higher. With that being said, it's not going to go higher at the same pace. We are going to see Bitcoin throttle back. So, you have to just remember that. Now, with that being said, I'll go into the next thing that's different about this bull market than the previous bull market. As can be seen, a couple years ago, M3 was decelerating. Yes, it was still growing, but it was decelerating because of Federal Reserve monetary policy, and the price of Bitcoin went parabolic and higher. This go around, as you see, M3 has just accelerated to record levels of increase, and the money supply is expanding at an incredible pace and rate. This is year over year percentage change for M3 money supply of the US dollar. And people are surprised that we had a record-breaking first quarter return. And they think it's due for a pullback. Now, you're going to have to combine this with the next point I'm going to make. But I'm not surprised at all. I mean, I would be surprised if we do pull back. And we do pull back to the levels people are saying. Because it makes no sense. It doesn't match with the fundamentals. I mean, you have to start to ask yourself, $40,000, does that make sense? Maybe we do get there. I'm not going to be arrogant enough to say, an absolute, because if you ever trade in markets, ever invest, all these things, you will constantly and continually throughout the whole time you do that, and your whole career in doing that, and the whole, amount of time you spend doing that, be surprised. And you'll be surprised and you'll be wrong. However, what I'm seeing in the, monthly chart for Bitcoin surprises me. Once again, I'm surprised. Does it make sense? Yes, it does make sense. It would make, no sense if it wasn't doing that. It would make no sense to me if we pull back to 40,000. Now, can we pull back to 40,000? Yeah. Because you know what? If trading and investment and, not just holding it as a hedge and hodlers dominating the Bitcoin market, but traders and just these people who want to have it bounce around are dominating it, I don't think they are. Especially with institutional investors coming in, they're not coming in to trade it. Institutional investors and a lot of these other investors coming in to hold it as a percentage of their portfolio, 5%, put it away, not touch it again. Well, not necessarily not touch it again, but that's why they're buying it. They're not. A lot of people coming into it that are new entrants, like MicroStrategy and Tesla, are not coming in to trade this, and they're becoming the biggest holders of it, and they're becoming whales. And these new whales are not coming in to sell and trade and have it bounce around. They're coming in to accumulate and wait and hodl it. So this is not surprising at all. I am not surprised at all. And as Michael Saylor has pointed out, what are your alternatives? Bonds? I mean, you see M3 rise at that extent, and we see where bonds are, which, yes, we've gone up recently, but God, you go back and you find it hard over the last 65 years to find interest rates this low. So, and with the amount of money and liquidity being put into the system, the benchmark, the hurdle inflation has to get over to start making, bonds and interest rates rise and bonds not attractive or good investments whatsoever is extremely low. So who wants to hold the bonds? No more. The new liquidity coming into the system is probably not going to go into bonds. The CEO of J.P. Morgan Chase said, he wouldn't be caught dead. Well, he didn't say that literally, but essentially he said he wouldn't be caught dead holding a 10-year treasury. The Schiller PE ratio, the price of stocks. I mean, is that good company to be in? Stocks have not been this expensive since the tech bust, and they're more expensive than right before the Great Depression. So, I mean, do people really want... I mean, yes, people are going to buy stocks, and it's insane if you watch CNBC or you listen to Bloomberg. You hear a lot of people say, well, where else are you going to put your money? And I think more personally, they're idiots. And if you have a financial advisor who just says, look, what else are you going to do? Just put it here. I mean, that's a terrible reason to invest. You should have a reason to invest. There's a reason for everything. Things make sense. And, you just have to figure out why things are doing what they're doing. And then once you understand why things are doing what they're doing, and then when it comes to investing, once you understand that, you can start to say, all right, what is intrinsic value? What is a fair value? What should the price otherwise be, and what makes sense? And once you start to do that, you look at what the current price is, you think of where you believe it should be, and then if it's lower, obviously you buy. If the price today is lower than where it should otherwise be, you buy. And then once it goes higher, you sell. I mean, it's really, when you break down investing, it becomes very, very easy. But no, yes, money will go into stocks, but not as much as we think. And if interest rates rise, money will come out of stocks. Will money go into bonds? Maybe. I seriously still don't think so. So if money comes out of stocks, if money's coming out of bonds, where is it going to go? I mean, seriously, come on. So, Michael Saylor actually put out a survey, and he asked people, where are they getting the money to buy crypto? The majority of people are taking it out of stocks, which obviously makes sense because they're extremely expensive. So when you look at all of this, we have 4 reasons why it's doing what we're doing, or Bitcoin is doing what it's doing. And I'll just go back and I'll summarize. The miners do not have to sell Bitcoin, so you have less supply. New entrants are institutional. Deeper pockets, more money. If you want to think about in technology, there's adoption, and we're going through a curve, and it's kind of like a bell curve, and people think in terms of a percentage of individuals, we're past the new or early adopters phase. But if you change the bell curve from individuals to money and amount of wealth that can come into a space, we're still very, very early in this crypto game and in this crypto market. And the crypto market as a whole has a lot of room to run. Bitcoin still has a lot of room to run. Institutional investors, once there's a Bitcoin ETF, it makes it easy to become a part of a portfolio. Financial advisors will actually recommend it. Financial advisors, are not necessarily recommending, Bitcoin. I mean, yes, can they go out there to Coinbase and all these other things? Yeah, but they want it to be integrated into their platform, which is why Fidelity doing what it's doing this year is so huge. And we're just seeing these doors open and more money come in and the move be stronger. So there's more demand. Less supply because Bitcoin miners don't have to sell their Bitcoin. Global monetary policy is, as you saw, incredibly easier than it was during the last bull market, and alternative assets are much, much more expensive. So then when we go to this chart, and it's not perfect because I cut off something that was important, but we started off the year around 30,000, then we went up to 44,000 roughly. I'm sorry, not 44,000. We got close to 43,000. And then we pulled back to under 30,000. And then we went up to 58,000. And then we pulled back to low 45,000. And we actually got close. We tapped 43,000. And then we went up to 60, ish thousand, and then we went to being at 50,000. Now the $60,000 to $50,000 move isn't anything to write home about, but we've had two 25% plus, actually probably closer to 30% pullbacks this year. So people proposing we go to 40% or $40,000, that would be from the high and even the most recent high in excess of 30%. And yes, go back to the previous bull market and see if in 3 months you had 30% roughly or more pullbacks with another 15% pullback in the middle there. It doesn't make it didn't happen. We did have 40% and almost halving, like Bitcoin almost went down 50%, and we had these sharp pullbacks, and we did have a head and shoulders pattern in there, but it happened and then we moved higher. It happened and then we moved higher. We didn't have it happen 1 month, happen the next month, happen the next month. We didn't have that happen. With that also being said, you're going to propose that we're going to go down to $40,000. We're going to have 3 pullbacks of about 30% or more in 4 months, so almost every single month, given the fundamentals I just laid out for you. That doesn't make sense. Now, like I said, if we go to 40,000, how long are we going to be there for? Maybe a heartbeat. If we go to 40,000, I'm buying hand over fist. It's going to be insane. We're going to bounce off of that insanely, but if we're going to have that volatility down to 40,000, then we should be going to 100,000 before the end of May or June. We should be going to 100,000, and I don't think that's happening with the new institutional investors who are coming in. What I think you're going to see is a melt upwards, and I think you'll see some fear of missing out, and we'll see some, continually, relatively speaking, comparing Bitcoin to other asset classes, yes, we're going to see, more volatility, but you're not going to see the same volatility as you did in the previous bull market. Not just that, people, are saying we got overextended and, all of this other stuff going on, and just look at the monthly chart. It's moved way too fast. Okay, yeah, I'll give you that, but I'll also say, we've had a number of corrections and pullbacks. We've had 3 corrections with 1 serious pullback in 3 months. So the pace has slowed, and I think it will continue to be gradual. As you see from this chart, I see us in an upward wedge, and throughout the end of April and into May, I just see 60, 70,000 being where we end up. Could we break a little bit higher than this? Yeah, but, when you look at from the beginning of the year until now and compare that from October last year to the end of the year, you saw this parabolic move, which kind of extended into the beginning of this year, and then this sharp pullback. And now you've seen this turn into a stair step, and that's because it came onto the scene. Now you have new people coming in, and this new money. That's how they do it. They do stair steps. And the reason why it does a stair step is because every single time it hits that upward wedge, the upward trend line, but the bottom upward trend line of this wedge is because that's where they're buying. That's where these institutions are coming in and buying. And that, like I said, institutions, the new money, they can't just put $1 billion order in and just wait for it to happen. They have to have people do this over time. And that's what's happening. And you think, well, wouldn't they like to have it at 40,000 as compared to 60,000? Yeah. Or 58,000 or 55,000? Of course. If you said, Steven, I'm going to give you $100,000 of Bitcoin priced at 40,000, or $100,000 worth of Bitcoin priced at $60,000, that's where your cost basis is. Of course, I'll take the cheaper one. Every single person will. But the thing with Bitcoin is, when you look at the fundamentals and supply being constricted and everything, it pays to be first. And that's why you've seen 3 higher lows put in, because you did have a sell-off. But then every single time we're getting a sell-off, it's being sucked up, and then that supply is not remaining in the system and is being drained out of it by hodlers, new entrants hodling. And now we're seeing Bitcoin miners become hodlers. So you're seeing sell-offs but they're getting weaker and weaker in terms of their impact on the price, and we're boiling upwards. So what we're going to continue to see is Bitcoin go higher. Now, a lot of people have gone out there, and I'll wrap it up and finish with this, a head and shoulders pattern. And they were concerned, and we're kind of forming that. But we broke out to a new high in early February, then on a 45-degree angle, but then we bounced up, bounced down, retested that previous candlestick. It became a floor. Then we went up on, kind of like a zigzag, and then we ended up what people were saying is making a head. But that looks more of a different pattern there, and we're forming a wedge. But then what you see is we went down, and then we came back up, tested 60,000 again, couldn't go through it. Then we came down, hit 50,000, bounced off that, tested 60,000 again, couldn't do it. And now we've come and we've hit the bottom trend line of this upward wedge. And what you end up seeing there, and I have it marked, is a reverse or an upside down head and shoulders forming in what a lot of people are saying is a bigger head and shoulders. Now, you can stick with the bigger head and shoulders and tell yourself, yeah, we're going to go down, blah, 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 blah. But, you're wrong. And the reason why is, like I said, $40,000, which is where they would propose we go, or $50,000, which is where they propose we would go and make the head and shoulders pattern. But usually for this bigger head and shoulders, we would have to go down to the 40,000s. And does that make sense with fundamental analysis? I mean, really, are we going to get to a point where, through almost 5 months, 6 months, Bitcoin will be just a 33% return, given, the current economic environment and surrounding circumstances? I think not. I think, we did have a lot of money come in, and we're consolidating. And Plan B is more accurate and correct, and has a better understanding of this market than a lot of other individuals talking about it. So when you look at the fundamentals, yeah, I could point out a head and shoulders and say we're going to go into this really large pullback and everything, but it doesn't fit with the fundamentals. So you look at the chart and you continue to see, is there something that I'm missing, and does it, is there something else that fits into fundamentals and makes sense? And yes, it's an upward wedge. And now we've seen an inverse head and shoulders form. So we're hitting Fibonacci sequence levels and bouncing off of them that are, around the same place we're hitting the downward trend line. And we have, as we've seen, our 50-day moving average, we bounced off of that, and now we're coming close to it again. So we have a 50-day moving average, an upward trend line, Fibonacci sequence coming into play, and a head and shoulders forming with a wedge forming, an upward wedge, and an inverse head and shoulders forming. Yeah, no, all of the momentum is turning towards this going higher. Going a lot higher? No, but this going higher to, like I said, 70 to 80,000 by the end of April. Then we're going to have a pullback, and we'll probably retest 60,000. And it will make sense, but it will be a stair step. But then when we go back to 60,000, you're going to have institutional investors buy in again. And there's a ton of money waiting to come in, and it's going to come in, and we're going to bounce off of that, and we're going to stair step higher. So that is just what makes sense with the fundamentals, working with the technical analysis, everything coming together. And now it's just stacking up. It's just, the pieces are really starting to just come together, and almost every single day we're seeing another technical analysis or indicator flash, that we're going higher and we're going to break through 60,000, or we're seeing another fundamental aspect come out that just points to further adoption, further purchasing, further holding, further accumulation, further supply shock. And it's just, you get hit over the head. I mean, these people who are traders and technical analysts come in and they draw these, charts, and they just friggin', put so many different things on them. And then, a lot of them just get beaten over the head with the simple fact that supply and demand. There's less supply, more demand. Like, and that's the crazy thing about Bitcoin. So many people try to be so technical with it, and I guess I have in this video, but it's very, very simple. Less supply, more demand. Higher prices. And that's what we're seeing. So I felt like I needed to explain this chart and bring fundamentals and technical analysis together and just point out Bitcoin is going higher. We're going to finally break through 60,000, and then we're probably going to have a nice not bounce, but the beautiful candlestick higher as people, start to come in, and just the composition of those in the market change, and bears just getting crushed and not existing, and nobody really selling, and then just buyers coming in as a fear of missing out, retail buyers. We're going to see it go up a little bit, maybe 65,000. We'll get to there quickly, and then slow down and it'll sell off a little bit, and we'll just start to find a nice gradual march up towards the upper ends of this trend line as we move towards 70,000 by the end of this month, and we'll probably get above this trend line a little bit, and then I think we'll have a sell-off again, and it's just going to be a stair step to through the rest of this bull market. I mean, things will change, but I still think there's a lot of positive news, more adoption to come, and we're going to end up just continuing to see this bull market have legs. It's just going to be different than previous ones. But with that said, leave your comments. I'm sure there'll be plenty of them. Share, subscribe. Let me know your thoughts. But everybody, have a wonderful rest of your day.